everyone, this is Marshall Gittler bringing you the morning comment for September 19th. Well, it was looking close there for a while, but in the event, Scotland voted by a decent margin to stay in the UK. Sterling surged as was to be expected. It's reached our initial target of 165 the figure. Now it remains to be seen if the bulls have enough strength to push it to 166.45. Personally, I'd be hesitant to try to ride this one further, but please listen to our technical comment for more details on that. Longer term, no vote doesn't mean no change. There are going to be considerable political changes in Britain that may boost the growth rate of the country over the longer term. At the same time, we can expect the independence movement to have another go at it eventually, but not for several years, of course. Now, these are very long-term factors that won't necessarily have a day-to-day impact on the pound. The euro also missed taking a hit because a yes vote would have encouraged separatists in Spain, in my view. I think that's going to be the next focus in the European geopolitical problems. Will Catalonia hold the referendum on November 8th as planned, even though the national government says it's illegal? Interesting times. The ECB's targeted long-term refinancing operation program got off to a poor start yesterday as banks took up much less of the money than expected. There may have been technical factors that prevented them, but for now it appears the ECB may have problems jump-starting the economy and moving inflation expectations. The five-year inflation swap, ECB President Draghi's favorite gauge of inflation expectations, is now a few basis points lower than it was in August when he said that the ECB Council would have to take action to deal with the decline. The combination of the weak take-up and the falling inflation expectations increases expectations for the October ECB meeting. As for today's indicators, we already had the German PPI for August. It fell at the same pace as in July, as was expected. This shows that the German recovery is losing momentum and the risk of deflation in the Eurozone is growing. The euro didn't react to the figures, though. From Canada, the CPI for August is going to be released later today. The market consensus is for the headline figure to show an unchanged reading from July, while core CPI is expected to accelerate, which could prove a bit CAD supportive. The country's wholesale trade sales for July are also expected to rise. Now, the Canadian dollar has been on a tear recently. It's gained while the other two commodity currencies have declined. You might want to look at that for an interesting pair for some trade. And in the U.S., we get the Conference Board leading index for June. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX Global, wishing you solid trading.